Welcome back to another episode of the Anatomy of the Trade. During this week's session, we are still answering the questions. And today we're going to answer the questions that have come to us from YouTube, from you guys. So we're really excited. So this is part 2 of the Q&A session. So let's jump right into this. And here are some of the questions that we've picked up from YouTube videos where you just left us some questions. So let's just go through them one by one. The first one is, can we include the P&F targets? So this is a very common question that students would ask, where could I learn about, let's say, P&F targets? And by P&F targets, we usually when we think about the Wyckoff method, horizontal counts. So, and I want to show you a very good source for this information that you could find on YouTube. So go to our Wyckoff Trading Method YouTube channel and scroll down, and then under the Wyckoff point and figure, you will have 3 sessions. The first 2 are the free sessions that Bruce Fraser recorded on the basics of the P&F, part 1 and part 2. And this is completely free. So I would start there. You could also watch Hank's presentation as, and this was actually the last presentation that Hank had before passing away. It was on the P&F and his predictions that he did was the P&F counts of the major market swings. And then if you still have more interest about the P&F, then go to our website, wycoffanalytics.com, and in the on-demand courses under the P&F, we have 3 series that Bruce and I recorded together as classes. So start with number 1 and just go through that and just kind of see what kind of knowledge you get from there. So this would be my answer. But let me ask Franz. Franz, what do you think? How would you approach this, knowing now the body of knowledge that we have? If you would be looking for the P&F targets, how would you approach this knowledge? Where would you seek it?
Hi, Roman. Well, I mean, those are great sources. That's where I've picked up everything that I know about it. Although there are some books out there that help to explain how a P&F chart is constructed. But there are actually 2 different ways, I think, that I've seen now that we can use P&F. The first is targets, and the second is tape reading. And tape reading using P&F is it's a new skill that I've really been trying to develop for myself, because what it shows, what a column of X's and O's on a P&F chart shows, is the cumulative effect of buying and selling, and it makes it, in my case, certainly easier to get a sense and to make a better deduction about, is supply or demand more dominant, and how is the whole, how is that whole struggle shaping out? But as far as the places to get the information, yeah, that's everything that you need is there. And as far as, the question about, can we provide a P&F target? I suppose we could, but I like the old saying that, if you give a man a fish, you feed him for a day. If you teach him to fish, you feed him for the rest of his life. So I'd say, learn what's involved, and internalize it, and it will pay huge dividends for you.
All right. So I think that's it on the P&F question. Let's go to the second one. Is on-balance volume as useful as bar-by-bar price analysis? And that was on the latest videos on tape reading. And my answer to that actually was like, well, you use on-balance volume, I use the bar-by-bar. Kind of didn't want to go into a big explanation on this, but there are definitely some differences. So here we're seeing a chart of Apple. On-balance volume is at the bottom. So what is on-balance volume? That's just a cumulative visualization of volume signature, where there is a difference between buying and selling, up day, down day, and that is being accumulated as a data. And we kind of seeing the trends of buying or the trends of selling as it occurs. So for instance, here on the way up, we could see how buying is somewhat consistent in the volume signature. We have more days where we have buying than selling, and when the buying days come, they usually have larger bars than the selling bars. And that's what's being portrayed here in the OBV. So from that perspective, there is really not a lot of difference. And I would say that OBV actually is much easier to read than the volume signature here. I'm just used to this. I don't necessarily require OBV. You could say that you see the same trend with selling when the selling has become very dominant, and we're seeing the consistency of selling on the down bars, and we see how on the down bars that selling increases. That obviously is going to produce the downtrend in OBV. Now, what OBV does not actually show that much is places like this, where already on the way down, as the price goes down, the downward spread starts to decrease. So the result to the downside starts to decrease, and yet effort still increasing. So effort to the downside is increasing, the result to the downside is decreasing. What does it mean? Those are the conditions of buying, so we know that there is some demand behind it. And we kind of somewhat see this from a potential stopping action here on the OBV. But this is a little bit finer detail for me that is being lost a little bit in the OBV, and you're not necessarily going to see that. Also, spots like this, like those volume spikes, are extremely important for us to understand where they happen and how does the price react to those. So again, on OBV, this is going to be much, much harder to see rather than, let's say, something like this. I know that this is a momentum push above the resistance. The breakout is actually successful, and it shows strength on the breakout and suggests continuation. So therefore, whatever supply came in, I know that there was some absorption of that supply. So those type of the small nuances are extremely important, and I definitely want to notice them on the chart as I read the volume and bar signature. But predominantly, if you're used to OBV, use that, know the limitations of that. And then if you're used just to the volume and price signatures, just use that. Develop better skill to recognize everything on the chart of what you want to see. All right, let's come back to our questions. Next question, any advice on how to go from losing the money to being a winning trader? Franz, let's start with you. So what do you think is the answer for you right now to this question?
For me, it's really been to do two things. First of all, to improve my analytical skills. That's the first thing. To even, as I think you mentioned, maybe last week, many students, when they first come, they don't even know how to correctly observe what's happening. And it's just a progression. It's a lot of study. It's, you've just got to roll up your sleeves and understand, the nuances, and there are layers and layers of them, and it's just, it's a constant development process, and practice on paper, practice reading a static chart, then start practicing with a chart where you're opening it up bar by bar. You can do that on a number of different charting services, and then finally take it to the real world. But the second thing, and this is just as important for me and probably more important, is to have a process. We're really not wired as human beings to be successful in the market. We want to do what's easy. We want to do we want to avoid pain, and so emotionally we're constantly getting in to positions, if we just let our emotions govern our behavior, at the wrong time, and getting out at the wrong time. So having a process, and there are lots of, it's probably, they're just going over what the stages are, having a watch list, having a position list that once you're in a position, having a way to monitor what's happening, using, having risk control in place, position sizing, journaling to keep yourself aware of what's happening, having post-trade analysis once you're out of a position to discover what did I do right, what did I do wrong, and correcting it, and having an overall trading plan that you follow with rules. There are just a lot of steps involved in. Once you've got the analytical skills, that's just the beginning of your journey. The next thing is, putting together a framework to apply them to the market in a way that will, protect you kind of from yourself, and yet still let you take advantage of the opportunity. So to me, those are the two most important things to answer this question. And it doesn't come easy. It's a lot of work. It's a lot of effort. It's, it's easy to open an account and push the buy button and push the sell button, but to turn that into becoming a winning trader is a long and hard process, and there's no way around it.
Yeah, well, I don't know if I could add more to that. That was well said. And obviously, this is all personal as well. So Franz is, describing, his path, and obviously this could be the path for a lot of people. But also you have to recognize that you could be on your own path. You could go about this in your own way, but the underlying blocks that Franz was describing are going to be the same. So I would be thinking in terms of where you are first. So let's say that you are the beginner, and let's say we're going to say the winning Wyckoff trader. How about that? Because we are studying the Wyckoff methodology here. But this could be applied for any methodology, and just be applied generally to becoming a winning trader. So as a beginner, what's important is to have the knowledge as to how the market works, to have a specific methodology that has the specific beliefs about the market, how the market works, and specific tools that allow you to make that judgment as to what the market is doing right now and what potentially that could bring us to. Then when you go to the intermediate levels, and there is definitely quite a few levels there that you could go through, because each level is going to be having different steps. So here you need to systematize your knowledge. and then you need to start building skills. So I always say to students, knowledge is not a skill. And having a skill does not necessarily mean that you can execute the strategy. But at this level, systematization of knowledge, building on skills, and therefore you are starting to develop a trading plan. You are starting to backtest, your ideas. You're starting to understand the risk and money management. And you kind of go through this education at this level for quite some time. Then you go to the advanced level, and at the advanced level, this is where you are finally starting to have more sustainability of good results. There is more consistency. But that consistency only is being reached with, as Franz has said, with the process itself. So you need to understand, how do you go about your trading business in a sense of, what do I do on a daily basis? What do I do on the weekly basis? And you need to create this process so that you wouldn't deviate from that, because any type of deviations are going to bring you back to, losses, to losing columns. So you want to make sure that the process is established and sustainable. Then you go into mental execution as well. And with the mental execution, somebody, comes to me like somebody like a beginner, intermediate trader, and they like, well, I have mental problems, executing my strategy. If only I could just, do that, I would be very, very successful. And then I look at the trades and I realize that the knowledge is lacking, the skill of recognition is lacking. So sometimes people overestimate. I think it's a very natural trait for us as people, where we are. I think that people need to be a little bit more realistic about, where they are in terms of their knowledge and skill level. And my advice to the beginners and intermediate traders: do not concentrate on mental execution. You're not there yet. You're just not there. You have to concentrate on the knowledge and the skill building for quite some time. And it's the skill building that gives you the confidence, with the execution. So when you come to more advanced level, even there, my first step in my work with traders is the process. It's not the mental execution. Mental execution is something where you feel so comfortable with executing the strategy, and there are still some hiccups that are internally yours, internally belong to your mental landscape. That's when we start working on that. That's when it makes a lot of sense. You want to eliminate all of the prior mistakes that are not mental mistakes, knowledge mistakes or skill mistakes, process mistakes, before you start working on mental execution. And obviously, this is just, like a bare bone structure. There are so many sub-steps, for each and all of them. Another question that I've been asked a lot by students is, what books should I read? So it relates to your level. And again, it just comes from years and years of experience teaching people and teaching myself as well. So for the beginners, I usually say, read everything on technical analysis. That's your step number one. Then at the second level, I say, don't read anything now on technical analysis. Read everything on Wycof. And obviously I'm talking about Wyckofians, Wycof students. And then for the advanced students, I say, do not read books anymore. Just stop and do only one thing: read only charts.
Mm-hmm.
And this is where you start seeing, big results, because all of the knowledge that we need is in the chart. It's not in the books. But at the beginning, you have to create some kind of base of knowledge for yourself. You have to accept certain beliefs from other people as to how the market works. So as a beginner, you read a lot. As an intermediate trader, you know that you still need to read, because you still need to have a deeper knowledge on the subject. You have to become, a deeper thinker about the market. So you read, very technical, specific knowledge, specific material. And then at the advanced level, you already read everything that you need to read. There is no, it's almost like a waste of time to read some other people's thoughts on the subject at that level. You need to be able to be okay with your own thoughts on that. And then you need to create your own understanding, intimate understanding of how the market works, how the chart, how you interpret the chart. So you read only the charts. And this is where the biggest improvement comes. And then obviously, again, there are so many other things that we could probably create the whole segment, the whole episode, or maybe even the whole series on this question. So the path is not simple. Trading is counterintuitive to who we are as people. We are always in this, as species in the survival mode, right? So we need to survive, we need to procreate, we need to have food, we need to protect ourselves. So trading is all counter to all of those essential things that we were thousands by thousands of years conditioned to. And you are just basically fighting a big tidal wave. If you look at the emotional landscape that you need to overcome. So it's a gradual process. It depends on each person, how you could take the risk and be okay with that, be truly okay with this, understanding, some basic beliefs of like, you're going to lose money and you should be okay with this because this is a part of the process. And it's really hard for people to get to a comfortable place about that. All right. Well, hopefully that covers, Franz.
It was a great question.
Yeah. All right. So let's go to the next one. Does Wycof work with lower timeframes intraday? So Franz, I'll let you answer this. And I know that you don't trade the intraday, but from that perspective, it's even interesting for me how you could answer this.
Well, you're really putting me on the spot here. Having been on a lot of these anatomies of a trade where we've looked at your trades, which many of them are intraday, and when I look at the analysis, when I look at the, what we talked about last week with the three parts of the tree, starting with the trunk, figuring out the environment, going to the branches, looking at the swings, and then looking at the leaves of the tree, which is the individual bars. It works whether we're looking at it works with any time frame, because it's all just human nature. It's all how people interact, and human behavior doesn't change. And down to I think the term is fractal, down to the most shortest time frame, it's all there. Even in this crazy world that we're in today with these algos that are scanning the news 24/7, looking for individual words to trade on, and then putting these high frequency trades in, it's still, I think, to some extent shows up as a pattern on the chart, a Wyckofian pattern on the chart that has the has the information, you know, judging the market by its own action that we need. So that's the best answer I can give.
Yeah, sure. Well, my answer is going to be very, very short. Absolutely. Absolutely, you could apply the methodology on the lower time frame. In fact, I think that if you encounter some method that does not give you the analytical tools to analyze different timeframes or different instruments, that's probably not the best methodology. You want the flexibility of the method, to go to different instruments. You could apply Wycof to cryptocurrencies. You can apply Wycof to Forex, even though there are some problems with the volume data there and so on and so forth. You could apply, obviously, Wycof methodology, to stock trading, futures trading, different type of time frames. Even whenever you have price and volume and time, you basically can use Wyckoff work. So yes, absolutely. And check out our previous Anatomy of the Trades episodes. As Franz has mentioned before, we've got quite a few episodes on day trading on lower time frame. Okay, next one. How to improve timing in an extended trading range. Well, very interesting, because we could have trading ranges that are gonna have different type of definitions of how the price moves. So for instance, something like this, where we could be in the somewhat prolonged trading range. And imagine if this is maybe like 5 years or so, and you have different type of environments within this range. You could just like say that the first environment is still a reaccumulation, because it has those characteristics of the reaccumulation. Then suddenly we go into some kind of distributional mode, and we have a sell-off, and we have a distributional pattern. Then we go into the, let's say, reaccumulation again. So it's sometimes hard to, in those extended trading ranges, to define the actual bias. So I think that instead of thinking about the bias itself, you could do two things. You could think about the timing, and the timing is always going to be about confirmation. Confirmation of what? Confirmation that there is an emergence of a trend, because it's the trend that resolves the consolidation. So you want to catch this moment when the trend is starting to emerge, and with that confirmation, you could define the timing. And then the second one is that you could divide the trading range into different segments. So like right here, I wrote here, okay, reaccumulation, then distributional characteristics, then reaccumulation again. So trade those accordingly. Have your points of entry in the reaccumulation, and then exit if there is no continuation beyond the trading range. You define the distribution, trade it until you actually have some kind of reversal and confirmation that we're in the different environment. Trade it again, and then wait until you actually have the next signal that would suggest that now the trading range is going to resolve. And as you see the different character with which the price moves up, let's say, this rally right here in comparison to this rally or to this rally, if you see the character of the current rally, that suggests the breakout, that suggests some kind of backing up action and then the resumption of the uptrend, that position you could hold on and convert it from swing position into more of the long-term campaign position. Franz, your quick thoughts on this?
Yeah, that's great advice. And one thing that can happen in if we're early in our bias, and we've seen this, we can be early, and we have to recognize that it might just be a swing. It might not be the entire move. So just keep an open mind and be flexible, and don't get locked into, I think the term is confirmation bias, where we think it's going to happen and then not be aware of what the chart's telling us to the contrary.
All right, let's go to the next question, and that is, does Wyckoff work with Forex? And this is a very common question that we receive a lot from students. And the key here is that, well, we usually look at the volume signature. And I've actually traded Forex for almost 10 years myself. It just, I live on the West Coast in the US, so it's a little bit hard time-wise to trade through the night. And, I'm not as young anymore, so I can't do that type of thing. I could only campaign it. But I've traded it, and the key there is obviously the volume data. So could we trade even without the volume data? Yes, we can. Why? Well, because by the character of the price movement and how the spread looks, we could define what kind of volume signature we could have. One of the exercises that I have for students is to have, let's say, a price structure, and then the question is what kind of volume signature we have in this price structure. So it's developing the deeper thinking about what kind of characteristic specific spread might potentially have as the volume signature. It's a very useful exercise. So we could do that. So you could trade off the price only. And obviously, any type of structures that you see are always going to be, you could apply your Wyckoff thinking about this. So a stop in action is the buying climax, sign of weakness, LPSY, and off we go into the downtrend. Oversold condition, next trading structure right here, spring, LPS, sign of strength, and then off we go. So any type of trading range that you see could be analyzed as the Wyckoff structure, and that's the beauty of Wyckoff. We also obviously could make some kind of judgments as to the extent of the downswings or upswings and extract information from there. So can you use Wyckoff methodology on currencies and Forex? Yes, for sure. And I've been, doing this for some time when I was trading Forex. All right, next question. Looking for more tape reading knowledge. Well, first of all, let me just quickly state that we're still currently in the tape reading course that is unfolding. So we actually going to end up with, I think, 11 or 12 sessions instead of 10. We went through the first foundational series where I was explaining the basics, the concepts. So we were going through the barbybar analysis. We were going through the swing by swing analysis. We've talked about contextual analogs. We talked about the context of where those VSA volume spread analysis is going to improve. And then we had a bonus session with Gary Fullett. So he is a great tape reader, so I would definitely look into his work. We started with David Weis, and David is going to continue his classes. David is probably one of the most prolific tape readers right now, and I'll talk about this in a second. So we'll finish the sessions with him in December, and then we're going to start the sessions with William this Thursday, actually today. So for those of you who are still interested, definitely sign up for the whole course or sign up for the specific series. It's listening to different people on the same subject is going to be very beneficial because tape reading takes time to develop, and just talking about tape reading as a craft, it's a dying craft. Why? Because everything is computerized right now, and obviously the tape reading was like a major craft 100 years ago when Wycof was trading, when he was writing his publications and creating his courses. It was much more common then than it is now. So it's a forgotten skill. So the key for us, and I personally take this as a challenge, is just to preserve this skill and to deliver it to somebody who really wants, to know how to do this and develop this skill. So again, there are some tape readers that I definitely have a lot of respect for. So check out their work, check out our work that we do at Wyckoff Analytics. We do a ton of tape reading, and we're going to do even more going into the new year. And the key there with tape reading, one of the students sent me an email like, when I look at when you tape read, it's all so easy and it just kind of falls nicely into the analysis, and maybe Franz could expand on this. But when I start applying this, I can't get around all of these concepts and just apply them in the correct way. My reply to this is that yes, you are going to encounter a lot of resistance because you have to know a lot and then you have to develop that skill. So the only true advice that I have is practice. Practice, practice more, and then practice a little bit more. And then with that, you're going to develop that skill of recognition on the chart of the concepts, tape reading concepts that we are teaching. So I have no mercy for students who do not put in the time. I love the students that are driven, that like myself, and we kind of go and develop ourselves together. At the same time, if you just want to be an observer, that's totally fine with me as well. We have, quite a few students that come and, they need their own space. They need their own, their own personal space as they go through this material. And then we obviously respect that. Franz, so what else could you add on this question?
Well, I just say it goes back to the third question about how to go about changing your performance, and the analytical skill that comes from understanding tape reading and being able to apply it is a huge step in the direction of becoming proficient at analysis. So
absolutely.
That's my observation on that.
Yes, absolutely, especially with Wyckoff methodology. All right, guys. Well, thank you so much, YouTube listeners, watchers, for sending us your questions again. This is kind of unusual format for us, but around the holidays, we decided to do something like this. So if you have any questions, leave them below the videos and we'll accumulate them. And at some point in the future, we'll do this session again. Franz, this was a lot of fun, so let's definitely do this in the future again.
It was great, Roman, and I know we've got an audience that's inside the United States and outside. Thanksgiving is a United States holiday, but we all have lots to give thanks for, so it's something to think about. And as far as the questions that our audience gives us, it's great, because I know from time to time we'll start one of these sessions and we'll Roman will ask me, well, do you have anything you want to talk about? And maybe I do, maybe I don't. Sometimes, maybe more often than not, I don't. And Roman says, well, I'm not too sure what I will talk about, but here's what we'll talk about. So if we get more input from our audience on things that you want to talk about, it makes our job easier. So with that, happy Thanksgiving to everybody, and thanks, Roman.
Absolutely. Such a great conclusion there, Franz. So thank you so much. Happy Thanksgiving for those who celebrate, and we'll talk to you next week.